Welcome to Unleashed, the show that explores how to thrive as an independent professional. Unleashed is produced by Umbrex, which connects you with the world's top independent management consultants. I'm your host, Will Bachman. Today's episode is a recording of a webinar that I facilitated this afternoon, attended by about 80 independent management consultants, and led by Ryan Vaughan, who is a tax director at Mazars, a leading global accounting firm. Ryan answered our questions about the Paycheck Protection Program. So Ryan first provides a general overview that pertains to all businesses, and then he gets into answering our detailed questions about how independent consultants can access the Paycheck Protection Program. And some of the topics we cover include, if we aren't W-2 employees of our own firms, how do we demonstrate payroll to ourselves? How much of a loan should we be eligible for, and how do we calculate that? How does loan forgiveness work? The practical steps of applying for the loan. And then starting around the 45-minute point, we touch briefly on the Small Business Administration Economic Injury Disaster Loan, and if you're able to apply for both the EIDL and the PPP. So in the first part of this discussion, when Ryan is reviewing several pages of a slide deck, which obviously you can't see right now, we have posted that document on the Umbrex website, and there's a link right here in the show notes where you can download that document and follow along. In this episode, Ryan zips through the highlights of that slide deck. We go through it in about 10 minutes, but he's also done a full hour webinar on that document. And if you want to get the details, there is a link in the show notes that you can go and view that webinar on the Mazars website. So without further ado, here is Ryan Vaughan.
So everyone, I just want to start and thank everyone for joining, and hope that everyone is well and everyone's family is well during this crisis, and that will, emerge stronger, better than we were before. So thank you for everyone's time. And as Will mentioned, I'm going to share a slide deck with you right now, and I'll go through some of the high points or just the summary of, and then we will get into your specific questions as it relates to the PPP program, and then potentially other areas of the CARES Act as we go through the list. The person taking the picture. This slide deck, as Will mentioned, was used in an hour-long presentation on the PPP program. So I'm not going to get into all of the details here, but this will be available. But just at the overview, an eligible business is a small business, nonprofit, tribal business, or veterans organization with 500 or fewer employees. Sole proprietors, self-employed, and individuals are eligible, which was an expansion under the CARES Act from previous 7A loans. The loan amount is essentially calculated using 2.5 times your average monthly payroll, and that payroll is capped at $100,000 per individual. You can also add into that retirement costs, healthcare costs, and state and local costs, all covered, all paid by the employer or the company. The loan forgiveness terms, the terms for the loan forgiveness look at the 8
I'm sorry to interrupt you, Ryan, but I'm having a really hard time hearing because some people are not muted and I can hear everything they're doing. So if everyone could please check and mute. Thank you.
Yeah, it's Barry. So Barry, if you can hear us, would you mute?
Thanks, everyone. So the loan forgiveness period is the 8 weeks following the loan date, and looking at 4 buckets of costs: payroll cost, rent, mortgage interest, and utilities. And the sum of that is your maximum amount of loan forgiveness. There are 2 loan forgiveness clawbacks. May not be applicable in the independent contractor sole proprietor realm, but they look at headcount and salary paid during that period, and it can reduce your amount of loan forgiveness, and that's really looking to keep people employed and keep their wages up is essentially the goal behind that. And if we have questions, I can get into that further, but I think for this group, it's probably not as important headcount and wages clawback. Another thing to note is non-payroll costs can only represent 25% of your loan forgiveness amount. So if you have high rent cost or high utility cost, you may be limited in what you can include in the loan forgiveness calculation. And this is an interesting slide that we developed. It really looks at the timeline of the PPP program. And for this example, we use the loan date of April 30th, and that's relatively arbitrary, but we thought it was helpful to illustrate the periods that we're looking at. And the first period really looks back from February of 2019, and the period goes through, in this case, April 30th, 2021. Your covered period, which is the focus in the current year, February to June of 2020. That's where we look at some of the clawback cost and likely where the 8-week period is going to fall. Your payroll calculation cost to establish the loan amount. We've seen most banks looking at your 2019 calendar year payroll cost. There's ambiguity in the act to where you could potentially look at your trailing 12 months. You probably need to work through your bank to come up with that if that's a better number for you. Again, depending on maybe there were bonuses or something that were paid out, or you had a spike in revenue in a certain period that you want to include that might benefit you. The forgiveness period, in this case, would be the end of April through the almost the end of June for those 8 weeks to look at the payroll, rent, utilities, and mortgage interest. The loan has a deferral period of at least 6 months and up to 12 months. So that's a period there where we get out to April of 2021. And then below there's the forgiveness, and these are really looking at the clawbacks. So again, I'm going to skip those for right now, but if you have questions later, we can jump into that. But the clawback comparisons look to essentially 19 or early 20 in compared to your cost from February to June 2020. Here's a few screenshots of the tool that we developed to assist companies and individuals in calculating their amount. So I'm just going to skip through these, and it just kind of gives you an idea of what your loan amount is. In this example, it's $748,000. And this next slide, we calculate your loan forgiveness. Again, in this case, is $486. A little more complicated when you're working with, in this case, 50 employees, but still an important planning mechanism to consider when you're in that 8-week period. Definition of wages is wages, tips, commissions, self-employment income, guaranteed payments to partners. The wage component is what is applied to the $100,000 limitation on an annual basis. The retirement payments, group insurance, state and local tax assessed, that's additive to the $100,000. So that there is potential, depending on your payment structure and what you did with compensation in 2019, that your loan could be greater than 2.5 times 8,333, or $20,000 and change. There is potential that it would be larger, related to insurance payments that you may have paid and retirement payments. Again, just a quick overview. I think the only thing I didn't mention on this slide, the terms of the loan currently is at 24 months, an interest rate of 1%, with that 6 to 12 month deferral. So that's, you know, if there are going to be costs incurred, or costs remaining in the loan, you know, those are the terms that you'd be looking at. From the bank standpoints, and we have the published application from the SBA, it's a very simple document. I think there's 3 numbers on there, and that's your monthly payroll. It's a function of multiplying that number by 2.5, and then your number of employees, and the rest is really just certifying and making verifications. In our opinion, that's enough to get the loan amount, essentially, but it's extreme simplification of what goes into and the nuance of calculating and managing what your forgiveness amount is. And really, I think that's, you know, obviously the most attractive part of this is that you're going to have a forgiveness component. And while it's great to maximize your loan, if you don't understand what the forgiveness will be on the other side, you know, you can have a loan amount remaining that you would need to repay. The terms aren't the worst, but if you don't know it going in, you can be left at a disadvantage. We had a couple other things in here related to the CARES Act. I'm not sure the employee retention credit applies to this group, so I'm going to skip that, and the deferral of payroll taxes. There are a couple items from a business income tax standpoint in the CARES Act that I think are worth mentioning. The first related to net operating losses. The limitation to offset income was removed. You can carry back losses now for 5 years, to the 5 years preceding the year of the loss. And these were all previously changed under the Tax Cuts and Jobs Act, and they were brought back temporarily under the CARES Act. Additionally, for non-corporate taxpayers, so your Schedule C or LLC partnership type filers, the $500,000 loss limitation was removed. So you can now offset more of your other income with losses in your business. I think that was an interesting one that was expanded here that's likely applicable or could be applicable to this group. And you know, that was kind of it. Just wanted to share the high level items here and kind of talk about what we're seeing in that high level aspect. And I'm going to stop sharing, and then I think we can dive into some of the questions here that you know, Will provided me, and I'm just going to try to run down the list. And
Brian, Brian, let's start actually with there's been several questions in the comments, and I think probably sure. We can get to the specific bank questions in the process maybe later, but let's start with this question that a lot of people have around eligibility for us, as for probably the majority of folks on this call who are running an LLC, may have no employees, or maybe they have one employee. A big question a lot of people have is, how does your own compensation, how do you count that if you're not a W-2 employee of your own LLC? How do you count that as payroll? Could you talk through that part?
Sure. So this is one of the areas of the act that we're expecting additional guidance on. But right now, you would look, if your 2019 tax return has been filed, you would look to that as supporting, which I know with the delay to July, a lot of that hasn't happened. The other thing would be providing 1099s. as supporting to what your business income was or what your income was during the year. I think it would be beneficial if you have a set of financial statements. I mean, they don't need to be looked at by anyone, but even if it's just the QuickBooks report that says, here's my gross receipts for 2019, here's the group of 1099s that support that number, and that's really how you're going to establish the payroll amount for independent contractors, sole proprietors.
Okay, so the payroll amount would be your gross receipts less any expenses that you deducted from your business, and you'd say, okay, that's my payroll. And however, you know, for folks that are, you know, who paid themselves more than 100,000 in 2019, that anything over 100,000 is excluded. So you up to $100,000, which works out to, you divide by 12, multiply by 2.5, you get roughly $20,000 would be, you know, the loan amount you could get.
That's right, but you do get to add in the health insurance cost if the company paid. And again, the company, if you can see my air quotes there, is, you know, it becomes skewed a little bit in this scenario, but we do believe you're going to be able to include your healthcare costs as well as contributions to your any retirement fund. So if you made a potentially hefty retirement contribution, that could significantly increase your loan amount, as that is on top of the $100,000 salary or payroll limitation.
And does it work the same way if you're not an LLC or like if you're just a sole proprietor or you know, independent?
Yeah, that's our expectation. I mean, and I don't know so on just to give a little bit of background on the entity side of this, the business side, which went live last Friday, Thursday night at like 6 o'clock, the SBA released guidance on some of the applicable things to the business application. Hopefully, maybe they'll release guidance today at some point to give us a little bit of time before the Friday independent contractor opens up. But it's a very fluid situation, and but right now we believe it would be very similar for the sole proprietor without an entity, that they would, you know, pull their Schedule C essentially, or the information that they would have populated on their Schedule C if they had filed in 19, and put that as part of the application, support it with the 1099s or other documentation that you have around your income level.
Ryan, this is Astrid. By the way, your webinars last week were super helpful. I just want to thank you and the Mazars firm. I actually applied Monday for the PPP, but I think I messed up. I'm an S Corp and I contribute to a SEP IRA. Should I have included the SEP IRA amount?
So you can include the SEP IRA amount, and that's going to, you know, potentially really increase your loan, you know, depending on how much you put in there. It could move your loan amount significantly.
And well, I didn't do it, unfortunately. For the other ones on the on the webinar that have a SEP IRA, don't mess up like I did. But in this case, it would have been your annual contribution divided by 12 times 2.5.
That's right.
Okay. Thank you.
Sure.
Hey, Ryan. So,
Hey guys, I'd ask everyone to just go ahead and put your questions in the chat, and I'm going to try to facilitate here. So if you have questions, go ahead and put them in the chat. Please stay on mute. I'm going to try to go through the questions in kind of an organized fashion, which I sent out earlier. So if you don't mind. So I'm going to go ahead and take Ryan off mute. So if you have additional questions, please put them in the chat. I'll try to make sure we get through them all in order. So Ryan, a question. So I just want to continue on this eligibility question, make sure we've handled all of the iterations there. So looking to the list that I sent you earlier, I think we've covered the question if you're just an independent without an LLC. We had one question of if you run your business through an LLC and receive a K-1, and you perhaps also have one W-2 employee, when you fill out the application, should you select at the top LLC or eligible self-employed individual? Oh, hold on just a second. I got it. Okay, unmute. Okay.
Okay, I would select the LLC option. For a flow-through LLC partnership, you would include yourself in the wages or your self-employed income number in that wage amount. But you want to make sure you're the LLC so you can count your employee as well.
Okay. Another question that we had, Ryan, was sometimes consulting revenue can be a little bit choppy or feast and famine. So when we're working out our monthly payroll to ourselves, is the answer to just take the full 2019 revenue less expenses and then you just divide that by 12? So basically, if you had filed your 2019 tax return, you would take your total net income from that. Is that correct?
That's correct. I think that's the most practical and pending any guidance. Again, that's going to be the approach to get the number for independent contractors.
Okay. We had one question of sort of along these lines is, so some folks have wondered, well, what if I have a subcontractor that's not a W-2 employee, but that is a 1099? So can I count that person's, what I paid that person as a 1099, can I count that as payroll of my firm?
So unfortunately not. The SBA issued guidance, this was either, I think this was in the one last Thursday that excluded 1099s due to the fact that they themselves would be able to then apply. And essentially there would potentially be double counting if an entity or employer included the 1099 and then the 1099 filed on behalf of themselves.
Okay. Next question is around, my understanding is that for the Paycheck Protection Program, you do not need to show that your business has suffered from the coronavirus. You do not need to show that your revenue's down or down to zero or anything like that. But could you just either confirm that or correct me? So one person asked a question about, they think that, their understanding is that your business has to be suffering based on that. Could you speak to that a little bit? If that affects your eligibility?
So the eligibility, and it's one of the questions on the SBA application. You have to make a good faith certification that due to the economic uncertainty related to the COVID-19 pandemic, you are requesting the funds to maintain payroll, rent, utilities, and continue the operation of your business. It's a very broad statement, and I think it's open to interpretation. You do not need to show a drastic reduction of income. You don't need to show that you lost the job or your hours are reduced, but just make the statement that due to the uncertainty, you think you need this to continue to operate. So it's a broad statement, but I think given the current situation, it may be widely applicable.
Okay. We had another question, which is, if you're self-employed but you're missing some of the 1099s for 2019, so you haven't yet received all those 1099s, are those actually required? So if you know how much you got paid, so if you bank statements, how much money you received, are those 1099s required, or are those really just like if you prepared your tax returns, or if you have a sort of a accounting statement for the year, is that sufficient? What sort of requirements are you seeing?
So the requirements have varied by the banks. Really, the SBA has pushed that down to the banks to do the initial due diligence. And as such, there's, 100 banks and 100 different answers. So if you don't have all the 1099s, I would suggest bringing, your financial statement or what you have prepared to show your income, 1099s that you have, and then if you have the bank statements or snapshots of deposits that you're tying out, I think that's going to be your best support in the event the 1099s haven't been received. Also, at that point, you probably want to contact the bank and make sure you're on the same page, because they're ultimately the gatekeeper of moving you into the SBA approval.
Okay, great. So if you have additional questions about just the eligibility, go ahead and put them in the comments, and I'll make sure I review all those and hit any more on eligibility. Let's turn now, Ryan, to loan forgiveness. So walk us through, particularly as it pertains to independent consultants. My understanding is you get a certain amount of money as a loan, and then from 8 weeks following that, they look at how much you paid out in terms of payroll plus other eligible amounts that include health insurance, that may include rent, may include mortgage. But particularly for those of us who are running our own LLC, explain the details of how that loan forgiveness portion works.
Sure. So you're right. The loan forgiveness portion is calculated in the expenditures in the 8 week following the loan for payroll, rent, utilities, and mortgage interest. And unfortunately, there's not much guidance for the independent contractors beyond that. Based on the way the act is written, it appears that you would be able to potentially pay yourself the lost income with the loan proceeds and have it qualify for forgiveness. But it is surely something that we expect the SBA to provide guidance on in hopefully the next day or so before the application period opens. But certainly in the near future, it's just not clear in the language that you can actually just pay yourself if no income was earned. It appears to be the intent, but it's not specifically stated. But we believe that if your self-employed income is included on the payroll cost on the front side, the loan calculation, the definition doesn't change under the forgiveness portion of the act for payroll costs. So we believe that you should be able to count it on both sides, but it's not clearly stated as such.
Okay. Now, in addition to paying yourself, we've had several people ask about the other expenses. So if you're operating out of a home office and you normally, let's say, deduct a portion of your mortgage as a business expense, can that mortgage interest portion be counted as part of the loan forgiveness?
Excuse me. We believe so, and we think that the best way to support that is if you have historically been claiming that on tax documents and have that allocation, that's going to be your best supporting information. So even if it's 2018 and you said, 10% of my mortgage is for my home office, showing that you had historically done that, I think, is going to go a long way in helping the banks get on board and receive that forgiveness. if all of a sudden, now, I mean, maybe if your business started in 18 or in 19, you might not have the historical record, but if you had been operating for several years, never claimed the deduction for home office, and now you want to claim it, you may have a little bit more of a hurdle to go through to do that. So if you've been claiming it, I think applying that same ratio is what you're going to want to do until we know more from the SBA.
Okay, so and that's would also then apply, Ryan, to utilities that people may be paying and have deducted in the past and as a business expense a portion of their utilities or telecom.
That's right. Right.
Now you mentioned retirement benefit. What if you, for example, have a SEP IRA? The contributions that you typically make to that, is that considered a payroll expense?
So the language in the act, and it has not been clarified under the additional guidance, says any retirement benefit paid is included in the payroll cost. So paid by the company. So right now, yes, we believe that your SEP IRAs, your solo 401ks or single 401ks, contributions to that should qualify, and they should qualify on both sides of the loan calculation and the debt forgiveness. There's obviously a significant planning opportunity if you receive, let's say the $20,000 loan, and you can pay yourself $15,000 and change for 8 weeks, prorated at $100,000. So you still have a few thousand, let's call it $5,000 left of the loan. There may be a planning opportunity to make that as a contribution to your retirement plan, and potential, if you don't have the other costs, potentially offset most, if not all, of the loan. We don't know if that was the intent in the act. It appears to be open to that, but there could be clarification from the SBA saying, maybe an owner can't do that, but it would be okay for you to make a contribution on behalf of your employees. We don't know. That's just speculative, as it could be not well received if you're taking the loan and benefiting, solely benefiting your retirement fund. So there could be clarification from the SBA on that.
Okay. Let's see. Someone had a question. Annette asked a question. Is the April 10th date the loan application for self-employed independent contractors only? I'm sorry, could you just clarify, Ryan, what is this April 10th date that's coming up?
So the SBA broke the funds out into an April 3rd date for essentially entities with employees. And then there is the April 10th date, which opens up to independent contractors and sole proprietors. I think it was a little bit of a way to give the banks a break of everyone rushing in last Friday, even though they still struggled with setting it up. And I don't totally fault them, because, as I mentioned, the guidance was issued at 6 o'clock the night before. So, there were a lot of moving parts, but I think that was the intent, was to split up the rush into the banks by a week and give the banks some time to digest and start processing.
Okay. There's been a couple questions about, if you don't get the full amount of the loan forgiven, then what does it convert into? And a couple people asked questions that seemed to make it think that they believed it was going to be a 2-year loan. What I thought I had read was that it converts into a 10-year loan. But what happens for the portion of the loan that is not forgiven?
So the language in the act itself says the loan can be no more than 10 years amortization, no more than 4% interest. The SBA came out and said that for this program, they are going to target a 24-month amortization, 1% interest. So that most likely will be all of the terms unless the individual bank opts for a different term. But we think that's going to be pretty standard of 24 months and 1% interest.
Okay. Oh, and then there was just one more question about loan forgiveness, which was if you've prepaid some expenses, like if you prepaid rent for, let's say, April and May and June, can you now count those as part of the loan forgiveness, or does it actually have to be cash out the door in the 8 weeks following the time you get the loan?
So the rent, utilities, interest has to be paid and incurred during the 8-week period. So you wouldn't be able to prepay rent or prepay utilities as you haven't incurred them yet. One thing that we've talked about is if you are talking about or negotiating with any landlords the deferral of rent, you may want to plan that outside of the 8-week period in the event that you want to maximize your loan forgiveness. So again, just some thought going in on that side of making sure you're hitting taking advantage of and achieving the maximum loan forgiveness.
Okay, and then when do we actually apply for the loan forgiveness, Ryan? That's a question from Astrid. Does it sort of happen automatically, or at the 8-week point, do we have to then go file some paperwork? What do you expect to happen there?
Sure. So this could be a point of differentiation between the independent contractor, sole proprietor, and then companies with employees. So I'll get in companies with employees, because there's a clawback period that looks through June 30th. Most of them are going to have those conversations about loan forgiveness sometime in July, we anticipate, because you have to maintain or restore your headcount and salaries by June 30th to maximize your loan forgiveness amount. For independent contractor sole proprietors, since their headcount isn't going to change, it's likely going to be 1 and 1 at the beginning and ending of this. There potentially could be an opportunity to settle the loan forgiveness prior to June 30th. But that would have to probably be at the bank's discretion. So the bank each individual bank has been authorized by the SBA to gather documentation, certify the loan forgiveness amount, and then communicate that back to the SBA. So that will be the process when the banks determine when that period is you'd go to the bank, show your payroll cost or your payments to potentially yourself, retirement contributions, rent, utilities during that 8-week period, and then the bank will sign off on the loan forgiveness amount.
Okay, great. So Ryan, I think for the most part, we've covered most of the broader questions around eligibility and forgiveness. Could you talk about, just based on the conversations you're having with all your clients, talk about the process of applying for this loan with the banks, maybe any variation you've seen? I've heard that some banks require you to have a checking account and a loan already. Some maybe just a checking account. Some banks might be willing to take on new customers. What does the process look like? And also, have you seen any loans already been approved and dispersed? What should we expect if we're starting this process of applying for the program?
Sure. So it is varying by bank to bank, and I think most traditional banks are preferring that you have some existing relationship with that bank. Now that varies from a credit standpoint or a checking account or business account, but most, I think, are targeting their existing clients first before opening up. And that's on the traditional bank. We have seen some, I guess, untraditional banks that have been open to new clients. And those are, I've heard some good stories and successes in getting the application in with those. The application process, it varies from bank to bank, but I think from a standard standpoint, the Sba application has generally been requested. That's available on sba.gov. It's a pretty straightforward name, business entity. You know what? I bet if I pull it up here, I can share it. If Will, you think that makes sense? I can share it really quick.
Sure.
Let me see here. So this is the application, and it sounds like some people, based on their questions, may have seen this already, but this is the most recent one. So it is pretty straightforward: sole proprietor, LLC, independent contractor, self-employed. Up here, your entity name or potentially your name, EIN or social security number, contact information, your monthly payroll times 2.5% plus an EIDL amount. And we can talk about that in a minute because I thought I saw a question on that in the list there. This is your loan amount, your number of employees. You know, you're looking to pay off payroll, lease, utilities. You have to show your ownership. A few questions that you haven't been disbarred or have a felony, or indicating your individuals owning more than 20%. You're located in the U.S. If you're a franchise. Here's the statement, or just a few authorization statements. The good faith statement that I mentioned earlier, that the current economic uncertainty makes this request necessary, and then you sign at the bottom, and there's some instructions and disclosures at the back. This generally has been requested and asked for by the banks. In addition, your payroll documentation. So in this instance, your 1099s or bank statements showing the payments received, along with a ledger or your financial statements showing your gross receipts. Some banks have started to ask for I would say historical information around the forgiveness cost. So they may ask, I had a smaller bank, they asked for lease agreements. They asked for, what was your average utility cost during 2019? I think those were the two big ones that I saw, or lease or interest payments during 2019. Looking to have an understanding of what the forgiveness amount could be for that loan. We've also seen certifications around healthcare, retirement payments, and state and local tax paid by the employer. So anything that would support that as well, and that could be if you had any withholdings on your 1099. Historical or estimated payments made in 2019 for state and local taxes. Something along those lines would be, I think, what they're looking for there from an independent contractor standpoint.
Okay, Ryan. Another question, or sort of a two-part question, is in terms of applying for these loans, there was one question about, is it going to affect your personal credit? And number two, do you recommend applying to multiple banks? So you can't get the loan from multiple banks, but should we try to apply to multiple banks if maybe if we have a checking account already with a couple banks, or apply to one bank where we have a checking account and one of these newfangled banks that's taking new customers? What's your point of view?
It's a good question on the personal credit. I don't know if I have the answer, but I do know the SBA or the CARES Act waived the personal guarantee requirement as part of the SBA 7 loan. So you do not need to make a personal guarantee for this loan amount. So maybe it would not impact personal credit, but I don't know the answer to that for certain.
Okay.
As far as applying to multiple banks, I believe there is a question in the form that says you have not applied for this with another lender. So you would not want to apply to multiple banks for this. You would just want to use either your existing bank or some of the other banks that may be opening to new clients. But you would not want to apply to multiple banks.
Okay. Let's turn now. We have about 14 minutes left. I want to make sure we cover a couple other topics. If you have additional questions on the Paycheck Protection Program, go ahead and keep putting them in the comments. Could you talk a little bit about this other program, the Small Business Administration Economic Injury Disaster Loan, or EIDL? What's the difference between that and the PPP? Can we apply for both? I've heard about if you apply for the EIDL, you get this $10,000 advance. How does that work? Just talk us through the EIDL and how is that different?
Sure. So the EIDL is more a traditional loan through the SBA. You can receive funds up to $2 million. It does require a personal guarantee for loans exceeding $200,000, and the interest rate is about 3.75%, or generally in that area. It's administered through the SBA, where the PPP is being administered through the banks. The excuse me, EIDL is still administered through the SBA. And there is the the $10,000 grant function. So if you apply through the EIDL, you may be eligible for a $10,000 grant, which is accelerated monies distributed before the remaining amount of the loan would be sent. Based on your application, the SBA determines the loan amount and approves you for such amount. You don't have to take it, but you are offered the amount. You don't calculate it on your own, and like the PPP. As the EIDL interacts with the PPP, if you've previously applied, if you applied for the EIDL after January 30th, that amount can be rolled into the PPP amount. So if you have a EIDL and you roll it into the PPP program, it would increase your PPP loan amount. On the loan forgiveness side, if you receive the $10,000 grant from the EIDL, you have to reduce your loan forgiveness amount by that $10,000. So you only get $10,000 free once.
You can't double dip, right, for the expenses.
So you can't double dip on that loan forgiveness part. So is it still possible to get a Paycheck Protection Program loan and an economic injury disaster loan? You can get both?
You can get both, and I think I heard someone mention you cannot apply the cost to the same things, essentially. So you can't get an EIDL and a PPP and use it for the same cost. There's some uncertainty around this specific area. For example, an individual who may be making more than $100,000, the PPP caps them at $8,333 a month. Could you use the EIDL over to compensate them for that amount over? Maybe. it's not excluded. You could maybe take that position, but it could be an aggressive position, and there could be future guidance against that.
Okay. Maybe I'm a little confused. I thought the EIDL loan, I mean, there's no forgiveness on that loan, right? So
Correct.
on the EIDL loan, you could presumably use that money to pay yourself after the 8 weeks.
Right. That could be an option there.
Yeah. Okay. So let's see. Monique asks, she says, I applied for the EIDL loan last Wednesday. I have not heard anything back, even about the 10K grant. Do you know if there's a way to check the status, Ryan, of the EIDL?
I think you just have to wait to hear from the SBA. They're under extreme processing pressure at the moment, so I know everything's been delayed a little bit. But I don't think there's a mechanism to follow up other than maybe wait on hold for a few hours until someone answers.
Okay.
Unfortunately,
and then we had a question earlier about in terms of when you should think about applying. Ryan, is your advice to just apply as soon as possible, as soon as your bank opens the application for these things? Or would you recommend people wait for a couple weeks to sort of see how the guidelines start settling out?
So there was a number released, I think, yesterday that about 70 billion of the 340 billion had been approved by the SBA. So roughly, what's that, about a fifth of the amount, and that's been approved. I'm not aware of any funds being distributed yet, at least not on any that I've touched. And that was as of, let's say this morning. So and there's certainly a backlog in the SBA processing those. So I guess it's going to really be a personal and almost a business decision, right? If you apply and something comes out later that changes the cost that you applied with, are you comfortable that you may have a loan for 24 months at 1%? And carrying those costs. I mean, that's kind of how, with the lack of guidance, that's kind of what we've been communicating, is that, it can become a business decision that, if you apply today and Monday the SBA says independent contractors can't count their retirement cost.
Okay.
You included that, you may have a loan. And are you okay with that, or would you rather have more clarity and wait, for the middle of the month, knowing that there's a lot of velocity and, the funds are going? Although the president and Secretary Mnuchin, I think, just said there may be $250 billion more dollars going to the program. So
all right,
that's speculative, but I think someone mentioned that yesterday.
All right, so it's, at least my takeaway is, well, the getting's good. Karen asked a question that might be applicable to a lot of us, and you may have answered it earlier, but just want to make sure we all get it, is that for folks that where their net earnings are over 100,000 a year, the loan amount would be not just 20% of that, but it sounds like the loan amount would be up to 100,000 for payroll, and then you could add on your health insurance expenses and other sorts of potentially retirement on top of that 100,000, and then you take 20% of that number. Is that correct? So your loan amount could be something over 20,000.
Yes, it could be over 20,000. You would take the math would be, if you have $100,000 payroll, let's say you have $10,000 in healthcare, $10,000 in retirement, you'd have $120,000 in the bucket. Divide it by 12. You'd have $10,000 of your average monthly times 2.5. You'd get a $25,000 loan.
Okay. Let's see, and then a question about, can you pay off the principal early? So if you do get the loan, and let's say you decide, hey, I really don't need this money, can you just go ahead and pay it off in August?
There is no prepayment penalty.
Okay, so it sounds like it's pretty cheap insurance if you don't know exactly how your business is going to go. Advice may be to go out and get the loan, apply as soon as possible, take as much as you can, and if it turns out you don't need it in July, August, September, just pay it back, and it costs you 1% for 3 months. Okay, let's see. If there's any questions that haven't been answered, we've gone through most of them here on the sheet that I sent out earlier on the compiled list. Maybe just one question, well, if anybody has a chance and wants to add a question, and I've tried to capture most of them, about unemployment insurance. So apparently now as independent contractor or running around independent self-employed, you're eligible for unemployment. If you get the PPP, does that make you ineligible for unemployment insurance, or is that a state-by-state thing? What can you tell us about the unemployment insurance aspect, Ryan?
Sure. So you're right. The uninsurance was expanded into self-employed individuals and independent contractors, provided they can that they can certify their inability to work due to a number of factors related to COVID-19. So you have to make you can't have other circumstances potentially affecting you. You have to certify that it's due to COVID-19. It does not appear in the act that you cannot receive the PPP and unemployment, although we anticipate that to be clarified, that you would not be able to receive both. There was a rush to get this was written very, very quickly, and we think there will be clarification that you cannot receive unemployment if you receive the PPP.
Okay, and then I think the final question we have time for, Ryan, is Margaret asks if you've heard of any non-traditional banks that you might suggest that we explore that are offering loans to people that are not current customers. So if your current bank is being a little slow, or you don't meet their requirements, are there any non-traditional banks that you suggest we check out?
So we've had clients go to a couple banks. I personally haven't had any clients go to these, but the Lendio.com, GetDivvy.com, Cabbage with a K.com, and FundingCircle.com appear to be open for non-current clients in that non-traditional bank avenue. But I haven't personally gone through the process with any of them, but anecdotally I know that they're open to non-current clients.
All right, fantastic. Well, Ryan, I see we're at the top of the hour. There may have been some questions here that we didn't get to, and I apologize for that. I'm going to look through all the questions from the chat, and I'll send any that it seems like we didn't to Ryan. And then Ryan, I don't know if you have time sometime today, but we'll see if we get any of those. I'll pass those to you if you have a chance to look at them. This video we'll put up as soon as I can download the recording. I'll post it, make it available on the website, and send it to everyone here. And also Ryan had a link to his presentation. We'll send out that presentation as well. So Ryan, I really appreciate you taking time out of your busy day. I know you're talking to clients all day long, so thank you so much for taking an hour out to speak with us.
Thank you, Will. Appreciate the opportunity, and thanks everyone who joined. Hopefully everyone stays healthy, and we'll come on to this soon.
Really appreciate it. We have a whole bunch of thank yous here in the chats, like dozens of them.
Thank you.
George and Alana and Aline and Mohammed and David and Kendra and Jonathan and BB and Solomon, Pamela. So got a ton. We'll include your some Mazars contact info, accounting firm, and You're doing great work. Really appreciate you taking time out for us. So I think we can pause the recording here. Ryan, you can hop off. I'm just going to make sure I copy the whole chat into Word before I close the call. And I will get back to everyone who was on and registered today with this recording as soon as I can get it uploaded, as well as Ryan's presentations. So go ahead, Mark.
There are a few folks that got the Zoom link but weren't registered, so just if you know that's you, just make sure to send out a note so we can include you in that email.
Yeah, thanks. Thank you, Margarita, for that. Okay, well, thank you, everyone. I'm going to pause recording here.
Thank you.
And really appreciate it, Ryan.
Thanks, Will. Take care. Bye.